On today's episode of the Cryptoverse livestream. Welcome. I'm actually delighted to be here today. It is 1 p.m. London time, UTC, is it? UTC, Universal Time Coordination. And it is the date of 28th of November, is it? The 28th of December 2018. I'm your host, as always, Chris Coney, the host, creator of the Cryptoverse, founder of Cryptoversity.com. And I'm going to be your host today, as I always am. Well, the chat's already cracking already. That's lovely. So we got in the chat today. Planet Pokewood. Welcome. Never seen you before. Bulgaria's in the house. There's some new names here. This is interesting. Nice to see you all. And also straight away when we went live, which was nice. Nice to see some people. Early birds. Your screen looks great. Crypto streaming. Screen as in what? As in the whole roll picture, or do you mean this the backdrop? Now let me know, crypto streaming. Specifically, what do you mean? Do you mean the shot overall, or do you mean that thing in the background? Please let me know. Because as you can see, you can probably just about see the green screen peeping through there, but this barrier's in the way, so it's just an easier thing to stream with. So let me know. Crypto streaming, what do you mean? Righto, so this is the casual show format. People who like longer form content. If you happen to be listening to this on the public podcast feed, the free public podcast feed, just to let you know, you can get 5 times more content by signing up as a supporter from as little as $5 a month. All you have to do is head over to the Cryptoverse website. It's thecryptoverse.show. If you click on Get Paid to Watch in the top right hand corner, that'll take you through to the Patreon page. And if you sign up from anywhere from $5 a month, you'll get access to all of the podcast content every day, and also you get the full back catalogue, whereas the free public podcast feed, it only goes back 90 days and then they get deleted. So that's that. As well as becoming a patron on the Cryptoverse website, you can find all other resources that I provide on Cryptoversity. The URL for that is cryptoasset.school, and when you go there, you can do a number of things. You can sign up for my free video series if you're brand new to crypto and you're trying to figure out why is everyone so excited about it. This 3-part video series will reveal to you how the crypto revolution is bigger than the internet. Just pop your name and email in there and I'll send you the videos over the course of a few days. You can take structured online courses further down. There's now 7 online courses that you can access for one low monthly fee. And then there's the opportunity to earn a passive income in Bitcoin for helping me to promote cryptocurrency education. And if you refer someone to Cryptoversity, they just pay the normal price. And instead of me spending money on adverts, I will give you that money in Bitcoin as a commission. So that's the way it works. So those are all the ways you can access my other resources beyond today's live stream. Now, today's live stream is an interview. We're going to have Thorchain on the show. Here's Thorchain, a lightning-fast decentralized exchange protocol revolutionary, apparently. So this pretty much sums it up. Look, 229 exchanges, 2,000 odd digital assets, all the volume and all the market cap, all rolled into this thing called Thorchain, a single lightning-fast decentralized exchange protocol. So that's what we're going to learn about today when JP turns up. Just waiting for him to come on Skype here, and then we'll get him on. So let's see if crypto streaming has answered my question there about exactly what it was. In Norway's in the house. It's nice. Some of these usernames quite hard to pronounce. Don't shill stuff in the chat, otherwise I'll just kick you. Okay? So if you just say the name of, like, I'm going to remove that anyway. I'm going to put you on timeout for that. I'm not even going to repeat the message, because then that'll promote the thing you're trying to promote. Will Thor offer telos? Okay. Well, okay. I can probably write that question down for you, if you like. I'll put this in the show notes. If anyone's got any questions, I'll just write down, audience questions. Will Thor support telos? All right, I'll put that down here. The background is great. That's Marek, though. That's not crypto streaming. The whole template. Oh, this whole thing. All right, cool. Well, do things like subscribe or send a tip or whatever, and you can see a whole bunch of stuff that happens on the screen. Or this fancy layout, as I call it, where below me is the notifications, and then in the center you'll see the coin donations and all that. Yakety schmackety. Oh, speaking of which, in terms of new features, I've now set up crypto donations in a new way, so you can do it anonymously. So starting from the next video that I upload, you'll be able to donate crypto anonymously, including using the Lightning Network. So can I show you that? Probably. If you want to see that, I'll show you that real quick. So if I need to go to my BTC Pay server here and log in. Oh, well, maybe doesn't matter, I'll do it. I just need to do 2FA right now. If I tick in the box. This is pretty cool though. I haven't actually received a Lightning payment on this new setup yet, so I want to see how that works in real time. If anyone's got a Lightning wallet, then if you want to help me test this out, I would appreciate it. So the way it looks is like this. So what you'll do is you'll click the link in like the YouTube description to donate money to the Cryptoverse, and then you'll see this page, the Cryptoverse donations, enter a custom amount, and say you want to tip $1. You enter $1, click donate, it generates an invoice, and by default it selects Bitcoin. But if you select the currency, you'll notice we've got Bitcoin, Bitcoin Lightning, and we've also got Litecoin. So there we go. I've now got two setups for BTC Pay. One's for the Cryptoverse donations anonymously, because it doesn't collect your email address or anything. You just send the money, and it generates a new receiving address every time, so it won't link your donation to an address that's been used before. And similarly with Lightning payments are kind of anonymous anyway, because they're in a channel. So if anyone's got Lightning set up and wants to have a go at that, I'd appreciate it actually. So what I'll do is I'll stick the whoopsie daisy. I'll stick the link for that in the chat. Please, someone send me a Lightning donation. There you go. There's the link. I've put it in the chat for you, so job's a good one. Someone says, how long will the bear market last? What do you think? Well, nobody knows. What do I think? I think 2019 will be a bullish year, to be perfectly honest with you. I honestly do think that. Can you say for Asgard next time you use the banhammer? Oh. Well, the funny thing is, there is something in Thorchain. I don't know if you have seen that. Who said that? Adam Troy S. So it's kind of funny that you say that, because Thorchain has this thing called Asgardex, like Asgard Dex, Asgard Decentralized Exchange, I assume. But let's not get ahead of ourselves here. We need to get JP on to answer these questions. I mean, I've studied this a bit myself to make sure that it's something that's worth talking about. And I've obviously written the questions while doing my research. Hey, if any of you have seen my tweets recently, this is the infamous bulletproof beaker that I've been chasing, desiring for some time now. It doesn't actually have coffee in it right now, it has tea, but I'm a little bit obsessed with it now, making all my hot drinks in it. It's cool, isn't it? Oops, way up, and I want to spill it all on myself. This is just tea. Because I have one bulletproof coffee a day. We have a Skype notification, so that's probably JP. There's JP. Here he is, JP Thor. Here he is. He's put on me a little wave. There we go. Lovely job. Right. Are you all ready for him? If you're all ready, say I'm ready. Type I'm ready in the chat. Get your questions ready. Everybody ready? Type I'm ready. All right. I'll see if JP's ready. Ready. Chris Effect AI says he's ready. Everybody else ready? Right, just wait for JP to say he's ready. Yeah, he's read the message. He's typing a message. Come on. JP's typing a message. Everyone's ready, ready, ready. Planet Pokewood. That makes me laugh. So, who's that? Els get Zen. Oh, JP's going to be ready in 5 or 6 minutes. Okay, yes. Ping me a message when ready, and I'll call you. Alright, so I'll have to entertain you for 5 minutes. Hockey dokie. So I've got a few... disclosure. This is just a regular old interview, by the way. You can assume that all my content is regular, unless I specifically say that it is sponsored. So I'm interviewing Thorchain because their PR agency contacted me, gave me some spiel, which is actually down in the video description if you want to read it. And I read it and I thought, that sounds interesting. It wasn't something I'd heard anyone talking about, and it sounded interesting. So I was like, this is making some pretty bold claims. We best dig into this, just even if we debunk it, right? Even if it is total hogwash, at least the claims were bold enough for me to go, okay, let's dig into this, because it's worth it. If it is what it says it is, then yes, we have struck gold. For the next 5 minutes, let me just pull out the news stories, because there's a few very interesting news stories that I've put in my little pool. One of which is, I'm going to have to do an entire video about this, but basically hackers break hardware wallets, Ledger response. That's what I'm going to call the video or something. So check this out. This, wait for it. Let me pull up this video. So this is what's going around on Reddit right now. It's a YouTube video from a conference recently, and these three hackers put together this presentation. It's called wallet.fail, and apparently, I haven't studied this in detail yet, but they managed to break into a hardware wallet. So there's a little diagram where they have this elaborate setup. So this is their whole presentation. I haven't watched it all yet, but apparently these guys are claiming to have broken hardware wallet security, right? So that's part one, but already, before I've even been able to report on that, Ledger have put this out, and I only saw this 5 minutes before I went live, but this is Ledger's official response published today. So the article they've published is Chaos Communication Congress. Oh, that must be the event they were at. In response to Wallet.fail's presentation. So at the 35th Computer Chaos Congress, there you go, that's what the event was. Thomas Roth and his fellow presenters presented Wallet.fail, where they tried to demonstrate that hardware wallets were vulnerable to several types of attacks. Concerning Ledger, they presented 3 attack paths, which could give the impression that critical vulnerabilities were uncovered on Ledger devices. This is not the case. In particular, they did not succeed to extract any seeds nor pins on the stolen device. Well, that's a point right there. First of all, someone would have to physically steal your hardware wallet for these hardware attacks to actually happen, which immediately wipes out 99.9999999% of all hackers, right? Most hackers want to do it remotely. They want to find a compromised computer on the internet and steal your crypto that way. The fact that they stumble upon your vulnerable computer and don't know your physical location, and even if they did know it, it might be several thousand miles away, which doesn't make it economically viable for them to travel to your location and then somehow break into the premises and then somehow grab your hardware wallet, even if the hardware wallet is on site. So that straight away narrows the probability of someone stealing your physical device. You know, it's just like 2FA on your phone. The requirement to have a physical device drops the probability of being hacked significantly. So that's point number one. They would have to. This whole hack relies on them somehow gaining physical possession of the device, and only then do these attacks actually apply. So that's that. Every sensitive asset stored on the secure element remains secure. Don't worry, your crypto assets are still secure on your Ledger device. So there we go. I'm not going to go into this right now. I need to analyze this in full and watch the presentation in full, which is a good hour, an hour and 1 minute. So I need to watch that in full, get my head around what they're claiming, get my head around Ledger's response here, and then report on it from my point of view. But bottom line, TLDR from Ledger is, what's their TLDR here? The 3 attack paths, which were supposedly critical vulnerabilities, it's not true, and also in the particular, they did not succeed in extracting the seed phrase nor the pin from the stolen device. So there we go. That's what Ledger is saying. I can verify that by watching the presentation myself. The reason why I mentioned that today is because you might run into that, at some point today, tomorrow, over the weekend, before I get that video out. So I didn't want anyone any anxiety, Oh, you see, you've all clicked on the. I see you've all clicked on the donation link that I just posted in the chat. Although none of you have finished it, have you? That's kind of funny. I was going to show the screen there, but it'll show you all of the invoices that have been pulled up on my server. But I don't want to compromise anyone's privacy. Not that that's possible anyway, because there's no personal information collected. So I'll just close that window down completely. Jolly good. So what else you guys got to say then? What would be a good price for LTC to buy at? Not financial advice. It's a difficult question. I'd have to do some technical analysis in order to answer that question. Maybe we'll see a bullish sentiment around summer. XRP is the only likely token to explode. I don't know. Please make sure you invite Chris Effect.ai on the show in 2009. Okay. Well, if they contact me and request an interview, I'll see about scheduling them in if their project is interesting enough. We need to keep an update for hardware hacks. Justin coming out and saying it means we're one step closer. Well, no, we don't need to keep a... We only need to address, I suppose, the FUD, because FUD can be generated very cheaply and very easily, right? Very easily. And then it takes people like me hours and hours and hours of research to find the truth and then debunk it. But the truth seekers have to put in 10 times the work to disprove FUD that takes 5 minutes to create. So that is really irritating. So there we go. But we can't, I suppose I can't reasonably ignore things like someone claiming that hardware wallets can be breached, right? So, what is on my mind about LTC? Nothing right now, to be honest. I have a clear mind. Do you know XOV Bank? I do not. Why are people saying to remove coins from exchanges? Okay, from the event sometimes in January the 3rd. Okay. The Joshua Tan is referring to proof of keys. So let's have a look here. Let's go back to the browser here. Proof of keys. I think it's proofofkeys.com. There you go. So if you want to go to proofofkeys.com, why won't my streaming software log into my flinging flanging chat? That's annoying. There's the proof of keys event on the 3rd of January. So there you go. I've posted it in the chat. Proof of keys. As I heard about this from Trace Mayer, I think it's his kind of tradition that he's created on the 3rd of January. That's sort of like Bitcoin anniversary. And as Andreas Antonopoulos coined, not your keys, not your Bitcoin. So what Trace is proposing, and you can get the whole skinny, on the actual page, but let me give you my rendition of it. What he is suggesting is that on the 3rd of January, any one of us that has any amount of crypto stored on a third-party custodial service, whether that be an exchange, whether that be a gambling website, whether that be, I don't know, pairs.io, any kind of, third-party service that holds our crypto for us. He's suggesting that on the 3rd of January, we withdraw it all to a private wallet temporarily. The purpose of that being, to force those third-party custodians to prove that they actually have that crypto. Because one concern is, a lot of people think this is an attack on exchanges. Because a lot of people think exchanges are claiming to have more Bitcoin than they actually have. So just like a fractional reserve bank, a bank run is when everyone tries to withdraw their money at the same time, but there isn't enough money there for everyone to withdraw it. And then the bank has to close because they just don't have the funds to give everybody. So some people are concerned that exchanges are in a similar position, and that, an exchange, if you added up all the deposits from all the users, they should have 100,000 Bitcoin, right? But they might not have them all for whatever reason. So proof of keys is where everyone, just like a bank run, everyone requests to withdraw their Bitcoin all at once to see if the 100,000 Bitcoin that are on deposit from their users can all be removed. It's not as straightforward as it sounds. It's an alright idea in principle, but if you listen to the latest episode of Let's Talk Bitcoin, the podcast, Trace Mayer is on there, Andreas is on there, and Trace Mayer is putting forward the proof of keys idea, and Andreas, smart as he is, comes back with a whole bunch of concerns, practical concerns, as a computer scientist, as to why this may be a terrible, terrible idea from a practical standpoint. So that, Joshua, is what everyone's talking about on the 3rd of January, the Proof of Keys initiative, which Trace wants to make into an annual event starting from this year. That's another video I need to do. So it's a bit late though, isn't it? It's the 28th of December so maybe I could do a single, pros on it or something like a freestyle. All right, JP's back. So we're ready for him now. We're all ready for him. Well, yeah, now we'll get into discussion about proof of keys. Joshua's like, what if most of the exchanges don't have the sufficient funds? Well, then that'll kill the exchanges, when it'll damage trust in the exchanges, it'll damage trust in crypto, it'll do all kinds of funky stuff. So proof of keys could generate a big pump. It could. It absolutely could. Right, here we go then. JP's coming in. I'm calling him on Skype. Just make sure I've got it muted for a second. Here we go. Call. Here he comes. Hello, JP from Thorchain. Are you all right, mate? Good stuff. Right, are you ready to be patched in? All right, so you are now live. Are you gonna stay on audio, or do you want to come on video?
Oh no, I won't be able to come on video. That's okay.
You're just gonna go on audio. Okay, fine. Fine.
Yep.
That's fine by me. Right, let me get my questions in here. And maybe I'll put the Skype window on screen. Oh, I think he's disappeared. Oh, he's gone. He's disappeared. Completely disappeared. I think Skype crashed. That's excellent. Skype actually crashed. Call him back. Sorry. Oh my goodness. Oops, that was my bad. My Skype crashed. That was so odd. I was like, I'll just bring the Skype up on the screen. Alright, let's try getting back. Calling him back. Oh, really? Now it's saying the person is unavailable. Brilliant. Alright, let's try getting back. Calling him. Sorry about this, guys. Technology. Hello, JP. Sorry, that was me. Because my Skype just
that's okay.
shut down. I was like, what happened there? Alright, so let's get back to this. Press this button and then this button. Okay. So welcome, JP. Say hello to everyone in the live audience.
Hello, this is JP from Thorchain, dialing in from Australia.
From Australia. Excellent, excellent. So let's get into it. Let's begin with a definition, if we could, just so everyone's on the same page. And so when we start getting into some of the deeper stuff, everyone will have a basis of understanding. So can you, for us, define what a protocol is? Because that's what Thorchain talks about itself as a decentralized exchange protocol, right? So I think everyone might know what a decentralized exchange is, but when we talk about protocols, what essentially is a protocol?
A protocol allows other platforms and applications to build on top of, and are actually quite agnostic to the use cases, as well as in the particular case of a decentralized exchange, agnostic to the assets that will flow through it. So when we speak of, say, the internet, it runs on various protocols such as TCP, IP. And when we speak of the Bitcoin protocol, we refer to the underlying blockchain structure. And as we all are very familiar with Ethereum, Ethereum is essentially a protocol for driving essentially decentralized applications or smart contracts. And that's different to an application. Application is targeted towards a specific use case and a specific user base, whereas a protocol is largely agnostic. If that makes sense.
Right, yeah. So a protocol is like almost a language and a set of rules. And if everyone's using that protocol, they're essentially talking the same language, using the same set of rules, and they can all communicate, right? Using like a standard alphabet almost.
Yeah, correct. And it refers essentially to the lower part of the infrastructure that developers and entrepreneurs can build on.
Gotcha. Cool. So when I hear things like decentralized exchange, I think about like the 0x protocol, right? Which is a decentralized exchange protocol for Ethereum. But Thorchain, is it actually a chain of its own?
Yes, it is a blockchain that is agnostic to other assets, and it essentially targets usable and permissionless cross-chain asset transfer and on-chain liquidity to allow anyone to move liquidity over, and for exchanges and marketplaces to build on top of the protocol to access the underlying liquidity and features of moving assets around. Okay. Whereas 0x is almost like a second layer protocol that builds on top of Ethereum. Mm-hmm. So out of the box, it's constrained to Ethereum assets, and being layer 2, it inherits security from Ethereum's layer 1. That's However, Thorchain has its own security regime, its own security properties, and as a result, it can be built for a specific vertical slice of the industry, which is asset exchange.
Interesting. I hadn't actually made that distinction, so I just learned something there. When you said that, like 0x, for example, is because it's built on top of Ethereum, it's a protocol on a protocol. Essentially, you've got more complexity and more security risks there. If there's a flaw in Ethereum, then 0x is going to inherit that, isn't it? So that's a good point, that one. So, yep. So Thorchain is going to be its own chain. So, in the little spiel that was sent to me, they said Thorchain is a newly launched project. So, newly launched as in does it have a live network sort of thing?
So the research started probably about 9 months ago after our team was involved in submitting an application to the Binance and DEX through March this year with all this research. And we launched our testnet, or the testnet, in September this year. And we've been essentially, the team's been building on that testnet to where we are today, to the point where we're quite happy with the next stage of deploying our mainnet, which will be in 2019. Okay. And to create the first set of the bridges to Ethereum.
Okay, right. So it is going to be its own chain, like. So, just for some of the more technical users out there, can you tell us some of the design decisions and specifications around Thorchain? Do you have a token? Do you have miners? This sort of stuff.
Sure. So Thorchain is built on PBFT in a construct using PBFT, borrowing essentially Tendermint and Cosmos. I'm not sure if your users are aware of that protocol.
I've heard of Tendermint.
Essentially requires, so it's a Byzantine fault tolerant protocol that uses a replicated state database instead of the more classical blockchain, which means that the database is actually it can be quite versatile, and the update to the database is what is captured in a blockchain. So the protocol doesn't need smart contracts. Rather, the logic to handling assets and the transfers is actually built into the core protocol itself. And it's quite versatile. If the chain needs to the protocol needs to update, add more features, then it just requires majority support from the validators. It's not a proof of work chain, such as blockchain and the current instantiation of Ethereum. It is obviously a proof of stake chain, which means there must be an asset that the validators, of which there's when mainnet will be launched, there will be upwards of 100 validators that will stake in order to form the observable economic security of the network. And this is very important because the economic security of the network is what transfers security to the bridges. Because one of the cornerstone feature of Thorchain is that it bridges to every other blockchain, to Bitcoin, Monero, Ethereum, and all their assets and all their forks. But the key thing about the bridges aren't federated. They're permissionless bridges that use observable security characteristics to allow users to choose safe bridges to engage with to maintain fungibility of assets as they move across bridges.
Right, so the bridges. Right, so using 0x as an example again, the beauty of 0x was that it was able to connect all decentralized exchanges specifically on Ethereum, so you could like trade ERC20 tokens, from one side of the Ethereum network to another. Whereas Thorchain isn't restricted to Ethereum. If I drew Ethereum as a big circle, it doesn't actually have to live in there. It doesn't have to actually live inside any specific network because it's its own network that's going to have tentacles that plug into eventually, as many other networks as possible to create that underground mesh sort of thing, which you are calling bridges, right? And so the first network that Thorchain is going to support is Ethereum, right?
Yes. So the main characteristic of the bridges, the team call it the Bifrost protocol, is that they are permissionless. They are opt-in, and I'll speak to why opt-in is very important. They use economic security rather than hard security guarantees, and they're very versatile. And the complexity to the bridge is not on the blockchain side; it's on the Thorchain side. So once the first few are built to Bitcoin and Monero and Ethereum, it's actually quite easy to build them to almost any other blockchain. And the more bridges that are built and the more assets that move over, the more security is transferred to all other bridges, driving that network effect.
Mm-hmm. Can I just point something out here? There's some insect in the background that's making an awful racket. That's I already know is going to be driving the audience mental.
I'll see if I can
do something about that.
Yeah, no problem. So here in Australia, we have a lot of crickets.
Yeah,
but I can find somewhere a bit quieter. But yeah, keep going. Next question.
How did it get the name Thorchain?
So the team realized that a lot of the projects don't really build a solid brand, and the brand is almost an afterthought to the project. And in order to drive that strong familiarity, a strong recognition, and to drive a strong brand from day one, the team opted for a narrative that's quite well known, and that's Norse cosmology with quite a rich history there. So other projects like Ethereum went from Frontier to Serenity and et cetera, and so there's some other projects that try and latch onto these brands. The team opted for Norse cosmology, so there's really nothing else apart from that reason.
Okay, it's a brand with strength behind it, as it were. Power, which I suppose it comes across if you want to convey security and reliability and power and that kind of thing. Thor is is a good brand for that, right?
Yeah, exactly.
So how was the project conceived? Like, can you give us a few of the events that led up to who came up with the idea? And as entrepreneurs, we always have tons of ideas, but not all of them are then analyzed and deemed to be sound enough to actually pursue and put money behind and develop and get investment and so on. So can you talk to us about the lead up to how it was conceived and then the point where you were like, actually, this is going to turn into a real business?
Yeah, so like I said, Binance released an interesting global hackathon back in February,
Hmm.
and they called it the Dexathon. And we lead the kind of blockchain community in Australia. We're quite hooked in. So we to support Binance, we actually launched a hackathon weekend,
Okay.
and we had about 16s fly in from around Australia that participated in that weekend. And the outcome of the weekend, we have obviously selected our hackathon winners, but the research and the ideas was put forward across that weekend. We kind of consolidated it into one project, submitted that to Binance, and then decided to continue researching it until we decided that there was enough of a substance there that we thought would solve some of or what we thought at the time, most of the problems around decentralized exchanges. And we decided to continue building the team around it, and to build an open project, and that's where it is today.
Okay. Beautiful. Beautiful. It just occurred to me, if Thorchain is going to have the first bridge to Ethereum, right? Are you essentially going to compete with 0x in that regard? Because the decentralized exchanges on Ethereum could go use Thorchain rather than 0x, I suppose.
Correct. So, as we one of the first questions you asked me was, what's the protocol?
Hmm.
So, Thorchain is built to be a protocol that powers practically every asset out there, but additionally, it should power every exchange out there. So, every digital asset exchange that you go to, you log in, you pass the KYC, you're actually adding to their database, and you have no idea what the security architecture is,
Mm-hmm.
the security practices, and essentially just a white labeled copy and paste job from another centralized exchange. So instead, what all exchanges should almost practically, delete that old legacy infrastructure that has no observable security, and redeploy on top of Thorchain by simply running a validator and being party to, with 99 other validators. So straight away, they inherit much better security, because even if their own validator was hacked, it requires almost, it's a BFT network, so 1/3 of the network needs to be essentially under attack before a
Mm-hmm.
BFT network comes down. So they inherit security, but most importantly, they inherit the liquidity of the network. So once assets move on to the protocol, they're available for every exchange, every user, every trader, because those assets are essentially trustlessly swimming around in liquidity pools that any exchange can build on top of and build businesses around. And lastly, they can also add, you might log into an exchange to trade your favorite digital asset, and you won't be able to short it, or you can't margin long it, or you don't have the pairs that you want. With Thorchain, every asset is paired to every other asset via liquidity pools. When the team add features like shorting, lending, liquidations, etc., every exchange immediately inherits those features. So it's almost like a one-stop shop for all liquidity, all trading assets, but it's not loyal to any blockchain. It's not loyal to any exchange. It's not loyal to any jurisdiction. So it's completely neutral. And it's built that way to allow any user, any trader, any exchange to redeploy on top of the protocol, access the features and access the liquidity all in one go, and the security naturally.
Right. So that means then that I'm just now thinking in a post Thorchain world, if it was fully realized and adopted, none of those exchanges can then differentiate based on their back-end infrastructure, because everyone's on Thorchain. So everyone's got the same back-end infrastructure. So the question then is, in that world, just hypothetically speaking, how do the various Thorchain-based exchanges compete? What do they compete on exactly?
Sure. So instead of driving a competitive market, because the underlying protocol uses it provides the same liquidity, security, assets to every exchange that builds on top. Rather, it drives the exchanges to just offer a great user experience to their users and target a particular jurisdiction or a particular culture or language, like a Japanese exchange building on top of Thorchain would target a niche that's not available in, say, the Philippines, etc., etc. So it's taking the burden of liquidity, security, and features off the exchanges and allowing them to focus on the customer service, the user experience, and the adoption, which is what the Forte actually is.
Yeah.
And so it's more of a collaborative, and the more liquidity that each exchange brings to the network through their own marketing and growth and adoption, then it benefits them all at the same time. So it's almost it's change in the incentive structure, because the protocol rewards the validators through block rewards, being a protocol. So the exchanges are paid regardless by being a validator and economically contributing to the security of the network. They just have to go on above and earn on fees and transaction fees and trade fees. They need to essentially perform above and better.
Yeah. So again, from my own understanding here, so once this is really the benefit of protocols. And when I first started describing 0x, I was thinking, well, you've got every time an exchange starts up, assuming they're not, if they started off by bespoking everything, order book dynamics, all that sort of stuff, depth charts, the graphical user interface, then inevitably the standardized software packages come out and you go get one from a vendor and skin it as your exchange on the front end, and Bob's your uncle. But that same underlying mechanics is still being, it's like reinventing the wheel every time you build a new exchange. So in a post Thorchain world, you've generalized the standardized functionality of an exchange, all the basic stuff that makes it into an exchange, the ability to swap assets and place orders and all different types of orders and all that malarkey, different order types, staking or in liquidity pools for shorting or borrowing and all that sort of stuff. There's stuff that every exchange does, which is difficult to differentiate on because it's kind of the cost of entry. So then you're pushing the individual exchanges kind of further up the value chain. So you're forcing them to add more and more value, like the things you can't universalize, like localizing the languages or localizing the customer service culture, and the actual economic culture of the country, or any other kind of localization or niching that someone could say, hey, there's an underserved group of people here that use exchanges in this peculiar way. I'm going to go and serve them. And all I have to do is understand that market, but I don't have to worry about all of the technical infrastructure. I can just find the people who want serving and serve them. Is that a fair assessment?
Exactly. So it's pushing them away from the hard stuff, which is the security, the liquidity, and the features, and pushing them further down the chain. I should say closer to the user, so that the user ultimately has a better experience.
Right.
Because is there any DEX today that you go on and you can have a Binance level customer experience? There isn't.
Not
so that's
really,
what we need to get to.
Yeah. And the good ones like BISC. That's been under development for years and years and years and years, and I happened to play with it again the other day. It's just there's no liquidity on there to speak of, not in the British pound anyway. So it's just a nightmare, and the spreads are like 10% from the market price. So you're like, I want to use it, but I can't because it's just impractical beyond belief.
Exactly.
So you were talking earlier on not just about Thorchain being this decentralized exchange protocol. You also keep referring to it as, I can't remember how you phrased it, but you said the underlying protocol for all assets.
Correct. Yeah. So Thorchain, when you say bridge to Bitcoin or Monero, Ethereum, it users send the Bitcoin and Monero to essentially a multi-sig, which is monitored by a subset of the validators that secure the network, and a representation of those assets is then securely minted and is then transferred around. But those assets can represent anything, and Because we believe that Thorchain offers far superior liquidity characteristics and liquidity incentives, then we think that in a mature market or digital asset market, we think we'll move completely away from trusted centralized exchanges towards incentivized liquidity exchanges that pay you through a trustless manner to hold your liquidity on those exchanges. And there'll be, and Thorchain is agnostic to the assets. It doesn't care where the asset comes from or where it's going. It all treats it as equal first-class citizens. But most importantly, you are paid to keep your assets on the protocol through liquidity fees. And that's a big differentiator between other projects on this protocol.
So how does the custody work in that regard? Because again, Thorchain is this separate network, and Bitcoin is its own network. Bitcoin BTC is a native asset on the Bitcoin network. So how do I end up with my Bitcoin in a liquidity pool on Thorchain? Like where does it live?
So this is the thing, that there's actually no such thing as Bitcoin. The Bitcoin that we know of is actually just the difference between unspent transaction outputs on the Bitcoin network. So it's actually just information, and it's not actually this cold, shiny Bitcoin that lives on the chain and moves discreetly around. It's actually just a little bit of information that the network responds to in a trustless and predictable way. Okay. And all we're doing is essentially copying that information, which is the differences between the unspent transaction outputs, onto Thorchain in a trustless manner. But that information, once it reaches the bridge, is locked there indefinitely. And that's copy of its information, which is immutable and atomic, as in the copy is perfect, so information is then transferred to Thorchain and it moves around its own asset. But it maintains 100% fungibility at all times. And that's done through essentially economic incentives. So let's zoom into, say, the Bitcoin bridge. We have 100 validators on Thorchain, and at any given time, 10 of them will be monitoring about 5 to 10 different bridges to Bitcoin. There's not just one bridge, there's about 5, 10, 20, maybe even 100. And every bridge is monitored by a different set of 10 validators, and they watch those multi-signatures. And every epoch, which is about between 3 days and 7 days, the Bitcoin assets move, they rotate. Basically, they kick out one of the validators and sign in a new one. And this ensures liveness. That is, the validators always are able to move the assets along and demonstrate that they still have access to the private keys to monitor those locked assets. So those 10 bridges are being cycled constantly by a different set of validators. At any given time, the entire network knows what's going on at all times, but only a small subset of the validators are actually party to the bridges. Meanwhile, the assets being traded around and shorted and longed and staked in liquidity pools and et cetera, et cetera. And then it's now time to exit, say, onto the Monero chain. Well, the assets are traded, and then it exits onto the Monero chain by just copying its information across. And then the Monero asset is then released. And then there's some other aspects, like who covers the mining fee on Monero and Bitcoin to avoid race conditions and such, et cetera. So the economics incentives behind the network are very robust. They ensure that validators can't cheat. If they do, they'll lose a lot of money. If a bridge is starting to hold too much value, then the protocol will essentially dilute it to prevent honeypots and attack vectors. So it's quite versatile.
Okay. Interesting. Very interesting. So when I think about this, it's quite ambitious. It might be the biggest challenge for Thorchain, I suppose, like every protocol, is it's at the mercy of Metcalfe's law, right? The value of the network is the square of the number of users. So I think of it from, if I'm an exchange, say, right, I'm probably getting pitched all the time by all manner of, revolutionary exchange, world-changing protocols or projects or technologies. And each of those, including like 0x and all this stuff, they all have the same they all have the same need to achieve a network effect. And effectively, the most valuable network is the one that has a quote unquote monopoly, because the one that has quote unquote monopoly is the one that has the greatest network effect and therefore the greatest value. Because all the users are there, all the exchanges are there, all the liquidity is there. So the way I phrase this question is, how are you going to roll your snowball faster than everybody else?
So the answer to that question is fundamentally one of incentives.
Okay.
And that is, you have to set up the incentives correctly from day one, so that the network is secure, but it pays for its own growth. And that's why Bitcoin was so successful, is that it was able to pay for its own growth. And through these Satoshi cycles, these 4-year boom bust cycles where, we have these kind of 100x growth cycles and a 90% correction, just recycles capital out and allows the network to invest in itself. Getting back to Thorchain, it's, look at the stakeholders. The stakeholders in the network are the validators who secure the chain and opt in to run those bridge nodes and are paid exit fees in order to pass security to the bridges. It is the traders who want to come to the network and be presented with liquidity and opportunities and features. And it is largely, and for the users who want to use the network to trade, their incentives are one of being paid to put up the liquidity. Because in the decentralized exchange world, it largely is a question of the assets and the liquidity. And like you said to me before, you don't like using this network because of the liquidity problem.
Yep.
And on Thorchain seeks to incentivize liquidity on day one, so that if you bring your liquidity to Thorchain, it is held in a non-custodial way. Your assets. But if you put your assets onto market into these liquidity pools, which we haven't really touched on yet, then you're paid on trades day in, day out.
That's interesting.
And largely there's a lot of latent liquidity out there. Think of how many assets is sitting on exchange wallets, sitting in cold wallets,
just
sitting even on Coinbase.
Not moving in, sure.
Doing nothing. Yeah, exactly. Now imagine if your Bitcoin can make more Bitcoin.
Right.
Because right now, exchanges, turn your Bitcoin into more Bitcoin through trade fees.
That's very true, yeah.
Imagine if you could do that.
Yeah.
If you had, say, 1 Bitcoin lying around, why is it lying around? Why don't you go and put it in a liquidity pool and turn your 1 Bitcoin into 1.1 Bitcoin over 30 days or 6 months? And that suddenly becomes very attractive.
Yeah, sure.
Because you don't have the opportunity to do that in a trustless way. And so really it's a question of incentives. And if you what incentive do you get to trade on Binance, where you get access to liquidity? But are you paid to put your Bitcoin into the Binance cold wallet? Absolutely not.
Sure.
So we think the first exchange that's able to solve the incentive problem will have the fastest moving snowball.
That's a good one, especially since there's the incentive from the user's end, right? Because they're the ones holding all the assets. So if you can get them on board with an incentive, like even for the non-traders, like just cash flow your static asset, that's to me that would be a pretty decent incentive, because it's passive. You don't actually have to do anything other than just do that stake, and then that's it. You've got an interest-bearing asset, which we previously couldn't earn interest in the same way. So I quite like that. It's good.
Yeah, correct. I mean, who are the power brokers in crypto right now? It is the exchanges, the Binances, and the KuCoins. When in the post-Thorchain world, if you will, the first-class citizens are the users who put the liquidity on market, the traders who arbitrage across market to ensure tight spreads. And the exchanges themselves become second-class citizens serving the users.
Interesting.
The validators are very important, but they're completely anonymous. You don't need to know who the validators are. And that's by design for robustness and resilience, because the validators bear risk, because the validators are actually providing the market, hashing the blockchain, providing the bridge nodes to bridge to Monero, Ethereum. The validators must remain anonymous, so they can't have a public face. And don't worry, they're paid. They're paid through block rewards and liquidity fees. But the first-class citizens are the people like you and me. and that's the way it should be.
So when you say fees, I I did ask you this earlier on. Is there a token in this network?
So there's a token, and it's quite unique. It's both a security token,
Right.
not through the US security laws, but rather
Yeah.
through economic security.
Yeah, sure.
That is, validators must stake it in order to demonstrate economic alignment and put up an opportunity cost that they're willing to risk on, i.e., they're willing to behave to secure the network and not steal your assets, which is great. So the protocol is designed to get between 40 to 60% of the asset tied up in its proof of stake.
Right.
Then about 25 to 30% of the asset is designed to be stored in liquidity pools, which provide liquidity to all assets and allow every pair or every asset to be paired to every single other
Hmm.
asset via this liquidity token. And lastly, it's the governance token. As we said, the protocol must adapt. If Bitcoin updates its node software, well, then this protocol must also update. If, say, Bitcoin Cash hard forks again, then what's the true Bitcoin Cash? Who knows? So that it needs strong governance, on-chain governance, because it's not trying to be a store of value. It's not trying to be a currency. It's just
Hmm.
trying to be a settlement layer between assets, and it's trying to be a security asset that you can observe and you can watch for. The token is called Rune, and it's just also borrowed from Norse cosmology.
Hmm.
Um, and then you go, obviously, is there a token sale? And the answer is no. There was one plan, but the team decided to cancel it and opt for essentially a zero token launch into a proof of stake, which is actually very difficult
Yeah.
because how do you launch a proof of stake network if there's no
Nothing at
tokens
stake.
distributed? Yeah, nothing at stake. Well, where there's actually nothing at stake. So the team have come up with a novel way to launch a proof of stake network with no token and zero coordination. And it uses another censorship resistant blockchain like Ethereum to spawn this blockchain. And it's very simple. There's a smart contract that's hosted on Ethereum. It's called the election contract. And let's say we have about 20 validated elects who want to help launch the genesis of this mainnet. Well, they post in essentially self-nominated elections into the Ethereum smart contract. And after, say, 2 weeks or 4 weeks, there's an election cycle
Hmm.
that elects the first cadre of validators, still no token involved, to hash out the genesis block
Okay.
in a deterministic order that's essentially requires self-nomination. So once that's sorted, then the blockchain can spawn, and the tokens start getting minted, issued out to the validator elects, and into the liquidity pools to allow wide distribution, and then the network grows from there.
So if I'm a user, do I pay fees on trades?
That's an interesting question. So there are transaction fees.
Okay.
Every blockchain must have transaction fees to
Hmm.
prevent Sybil attacks. And that's especially important for a BFT network where system resources are in very high demand. And two, so you pay a small transaction fee, which is to be expected. It's just a mining fee to fit inside the block. And two, if you do a trade, you'll pay a small liquidity fee. Now, the liquidity pools use the XYK model, which was first suggested by Vitalik back in 2016 on Reddit. And it's basically bonds the liquidity token with every other asset.
Hmm.
So let's say you have $1 million worth of Rune and $1 million worth of Bitcoin in a liquidity pool. And in this case, there were 1,000 Bitcoin, but 1 million Rune. Well, now we have the price between Rune and Bitcoin. If we assume the left always equals the right.
Yeah.
Now, if people trade from one side to the other via this market order, if you will, then they move assets from left to right, which shifts the ratio. Therefore, it changes the price.
Yeah.
So what we have is a bonded curve that asymptotes on the y-axis to the x-axis. So if too much moves to the left, then one token's price will go to infinity. If too much moves to the right, then the other token's price will go to infinity. But they will never run out, if that makes sense.
Yeah. Yeah. Gotcha.
So it essentially creates a perfect spread. And a perfect spread is quite difficult. But if you go on, say, Binance and you look at the order book, you can see what should be a symmetrical order book that's essentially like increasing away from the spread point. And there might be, I don't know, 10, 30 basis points on the spread, or should be, if it's a tight spread. But in a bonded token, the spread will be perfect. So the order book will come down exactly, and there should be no spread. But what's then, if there's no spread, then there's going to be slip. And the slip is what determines the liquidity fee.
Mm-hmm.
And that liquidity fee is then paid to whoever was staking in that liquidity pool. So just backtracking a bit, remember I said $1 million of Rune, $1 million with Bitcoin. Well, then you asked me who put that $1 million worth of Rune there and who put that $1 million worth of Bitcoin there. Well, it was about 10,000 different users. No idea who they are, but they staked it in. And when that trade was executed, there was a 1% slip or a 0.1% slip on that trade price because of the way that the bonded curve moved. And that tiny bit of slip is paid back to whoever was staking in that time. And it's not paid in the liquidity token. It's paid in the asset that was sold. Or sorry, the asset that was bought.
That's to close
so
the
if you
spread
were
again.
buying, correct. Yeah. It provides a natural carrying force. So if you were staking Bitcoin in that case, and someone sold Rune to buy Bitcoin, then you actually earn more Bitcoin.
Mm-hmm.
So it avoids black swan events, because if you can imagine, if everyone's trying to exit to Bitcoin via Rune, then a lot of extra Bitcoiners' fees will pile up on the right side.
Yes.
And as those liquidity stakers decide to capitalize on that Bitcoin by invariably selling it or withdrawing it, it reduces the amount of Bitcoin and pushes the price back again.
Mm-hmm.
So it's this well-designed liquidity pool that provides highly efficient markets and price discovery, and allows anyone to participate in the market. But it doesn't preclude people putting out limit orders, which are stored on chain. And then we can do some cool stuff, like, because we know the liquidity of every single asset. In fact, we know the worst case of that liquidity. So if you had, say, I don't know, $1,000 worth of, token Z, this random obscure token, and on Thorchain, it has a liquidity pool of depth, depth Y, then we know already what is the liquidity for that token. So then you can borrow on that token, which is never before heard of. If you come to me with a random token and if I had no idea how much I can get for it by selling it on market, I'm not going to lend you any of my liquid assets for your liquid token. But on Thorchain, we always know the liquidity of your token. So we can start doing cool things such as shorting any other asset to any other asset, lending, automatic liquidations, derivatives, indexes, baskets, etc., etc., etc.
Wow. Okay, so that this thing in a post Thorchain world, as I keep calling it, it closes all the market inefficiencies, really, doesn't it? All these little arbitrage pockets, because
Correct.
liquidity is absolute in this network. That's very interesting. It's
yeah.
I'd like to live in that world, to be honest. That would be a
yeah.
that would be a good world.
Well, that's what we're trying to build for. Yeah.
All right, let's talk about this AsgardX. What is this?
So AsgardX is just a demonstration exchange, because remember I said that the team are building a protocol. We're not building an exchange, but we are going to build a demonstration exchange that shows the power of this protocol.
Sure.
That shows how assets can be traded and through across these liquidity tools how you can stake. But once the protocols are running and there's real assets, then the team will it's already open source, but will incentivize and encourage the community to take over, copy, fork this exchange, because it's really now just a front end. There's no back end to AsgardX. The back end is this public blockchain.
Yeah.
And the order book is this public blockchain. And the security infrastructure are 100 random high-powered validators all around the world, completely anonymous. And that's AsgardX. So we assume there should be hundreds of AsgardXs into the future.
With different names.
You should have the Cryptoverse AsgardX. And you should target your users and incentivize your users to trade on your front end, because now the marginal cost to enter the exchange business basically goes to zero. The cost of hosting a website, which is just a front end. So that's what we're trying to build for, because the team fundamentally believe that all value and information transfer should be unencumbered and unoppressed. Because if you start encumbering, especially value transfer, then you create arbitrage opportunities and
Mm-hmm.
asymmetric markets and opportunities for people to be exploited.
Exactly.
If you build KYC and large controlled markets, then you open up inequality, you open up asymmetric information, an asymmetric market that can be exploited by those people who are in the market. So instead, what's desired is to equalize everyone, equalize the liquidity, equalize all asset access, and equalize value transfer. And you'll remove those pockets of inequality and asymmetric information and allow assets to be free, to be liquid, and to be trustless.
Sweet as. So we're coming up to sort of the hour mark here. So what does the project need most right now to help it move forward? What's the best possible person that could be listening to this, and what would you say to them if they were listening?
Sure. So we're getting ready to build the first bridge through Ethereum next year. And this project is an open project, so anyone can join. And you don't need any particular skill to help out this project. If you fundamentally believe in unencumbered value transfer and equal markets and free markets, then there's avenues to join the team. If you're a developer, then join a development team. If you're a community manager, join the community and help share the community spirit. And you can easily contact us through Telegram, Twitter, or any other online social channel. But fundamentally, this is an open project. It knows what it needs to build for. Like I said, it's not really encumbered by any agenda apart from just launching a mainnet next year.
Cool. So if people go to thorchain.org, all of the social media icons are listed right at the top of the homepage there. So that's very easy to find. Excellent.
Yeah.
So JP, have you got anything else you want to make sure we cover that isn't restricted by one of my questions?
No, I think we touched base. So we spoke about how Thorchain's a protocol, how it's trying to bridge all other blockchains by using a Cosmos-derived replicated state database. How they were trying to fundamentally solve the problem of incentivizing liquidity in order to promote our users as their own market makers and as their own first-class citizens. And we're trying to remove the burden of running security and liquidity and feature infrastructure away from a current power brokers being the centralized exchanges and push them further up the value chain so that they can have more of an interaction with their user base. And we talked about 2019, so we plan to keep building the Ethereum bridge, which will allow us to quickly deploy it onto Bitcoin and Monero. And the team's open, the team's public, and we welcome everyone.
Excellent. Well, this is definitely the kind of project that I would like to follow. So if you're willing, and you can speak to your people to organize this, but after a arbitrary amount of time, I'd have you come back and give us another update if you're up for that.
Yeah, sure. Maybe in 6 months' time.
Sure, yeah. We'll work that out offline. But for now, JP, thanks very much for being on the Cryptoverse.
No worries. Thanks for the interview.
You take care, mate.
Bye.
Bye-bye. He's away. Right, coming back. Here we go. Good grief. Well, I wrote tons of other questions, but I just saw at the time and we were already 45 minutes in. So that was interesting. He's clearly got expertise in markets, economics, trading and this sort of stuff. I can just tell by the way that he talks that he's got expertise in this, right? Interesting. Actually, it escapes me what position does he play in the business. Go to the team section. I can't remember what his position is. JP, it doesn't matter. I was just looking at the team section. I'm sure I could find out. But yeah, he definitely knows his stuff in this regard. And very, very deep knowledge. So it's guests like that. They can often get into some really deep territory and sometimes they even go over my head. But that's that. So, sorry, there was a few questions that came into the chat there that I wasn't able to ask, such as, did he kill the cricket? No, he didn't kill the cricket. But I mean, at least I spotted that. I mean, none of you folks complained about the cricket, but I knew that would be driving you bonkers, especially if you were listening to this interview rather than watching it. If you're watching it, maybe you could filter that out. But if you were listening, that cricket would have stood out a lot more, just because you're only on audio. Alrighty then. Any more questions for me before we go? Gandhi G, long time subscriber, new DApp trending in India right now. Gandhi G. Oh, really? What's Gandhi G then? But I'm going to stay here for another minute. For if you guys have got any questions for me. Obviously JP's gone now, so you can't ask me any more questions about Thorchain. But if you've got any questions for me, I'll put that out there now. Please post them in the chat, or forever hold your peace. After I say that, I have to wait for you to respond. If I Google Gandhi G, though, it comes up with Mahatma Gandhi. So, I don't know what to tell you. GandhiG.io. Oh, there it is. Lives on the Ethereum blockchain. Decentralized exchange. Why is it called? Oh my god, look at this. Look at this. GandhiG.io. Decentralized exchange where all exchange fees are paid back to believers. Oh dear me. What on earth? Funny. Funny. Oh my goodness. I don't think Gandhi's face is trademarked, is it? So, yeah, go nuts. Yeah, whatever. Instant karma. It looks like a bit of a joke, but it might not be. I don't know. I've only just heard about it, so I'm not going to say anything about that other than saying that's kind of funny. Yeah, do your own research. Exactly. So, any more questions? Otherwise, I'm going to play out now. Remember to check out that link and test out my Lightning payments tip the Cryptoverse thing. I posted it in the chat earlier on, but someone please send me a Lightning payment so I can see how it works from my end. Let me just check if anyone's done it. Just got to do a two-factor authentication thing again. Let's see if anyone's done it. Nobody's done it. Maybe you don't have Lightning set up, you lot. So, is what it is. Right. Now, where's the credits? Oh, I don't run the credits on this thing. Outro. There we go. I didn't do a live stream last week, did I? So, oh, look at my face. Made a mess of my face. Never mind. I'll play out like this. Thanks very much for joining me today, guys. If you liked this interview, please hit the like button. If you really liked it, hit the subscribe button. If you want to support the Cryptoverse, check out thecryptoverse.show. Click on the big blue button that says get paid to watch if you want to get rid of the ads and crypto rewards and support the show. You can also check out all the other resources at cryptoasset.school, including the 3-part video series, How the Crypto Revolution is Bigger Than the Internet. You can check out my structured online courses, which there are now 7 of. And also, you can earn yourself a passive income in Bitcoin on the website by joining the affiliate program and promoting cryptocurrency education. But other than that, I will be back with the next episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.